Well, ladies and gentlemen, welcome back to the channel. In this video, we're going to be going over my $5,000 bet on the markets going down that I will be initiating on Monday. That is going to be tomorrow. We are going to talk about the big catalyst for next week as well. We're not going to talk about those as much as I do want to go over the data that actually does suggest what I'm saying is the truth. And the best part about this is that Wall Street as a whole has not caught on to what we are talking about here in this video. They are still under the assumption that earnings are going to be great at companies in 2022. Well, the harsh reality of this is that when you give out stimulus checks to the lowest earners in the economy, they tend to spend that. The guys on Wall Street, they make so much money, they are out of touch with what actually happened with these stimulus checks. So let's dive into this video. Okay, so if you guys are in the buy and sell alerts community, you know that I like to put on small hedges against my portfolio and make small trades to make big profits. Like this trade, I bought two Disney $147 puts for $31 and $32. I sold one, made the other one free, held that one the next day, and cashed out at $870. So that was a 26x return on my $31 put. So great trade right there, right? But I want to go big with some of my hedges and possibly make a ton of money. And that's what I want to talk about here in this video. And this $5,000 hedge that I'm going to be putting on could very well turn into $100,000 if I get a 2,000% return on that, which is very possible. Why? Because we have just seen the market starting to sell off, and I don't think the markets have priced in what I'm going to be going over with you guys here in this video. So if we do take a look at Apple, keep in mind, Apple does control about 12% of the market weighting. So if Apple goes down a lot, the markets go down a lot as well. Now, I'm sure if you guys are watching this video, you probably are invested in AMC and other mid-cap stocks as well. I am not in any way, shape, or form putting on hedges on the stocks that are down over 60%. I am not doing that. I am going after the laggers here. I'm talking about your Apple that is still up 18% over the past 3 months. I'm talking about the broad indexes as well, because when Apple falls, the indexes fall. And we do have Apple earnings that happen next week. And the whole concept of this comes down to market expectations. The market does not expect earnings to slow down. As this chart will tell you, this was the crash of 2020. It's been pretty much straight up for Apple. Like I said, over the past 3 months, Apple is up about 18% overall. This chart tells you that expectations are not that Apple has less revenue in 2022 than it did over the past 2 years, but that is exactly what is going to happen. Take a look at iPhone searches. This is off of Google Trends data. They are at their 5-year lows. Look at this line, this gray line right here. We are approaching this gray line. We are at 30, guys. Just back in September, we were at 59, and just back a couple months ago, we were in the higher 30s. Now we're at 30, and this is likely to go down even more. So what is this telling you? There is less interest in actually buying iPhones or buying Apple products. And it's going to come down to not Q4 actual sales. It's going to come down to what Apple says about demand. If Apple says demand is starting to go away, people are not buying products as fast as of late, right? We've seen December retail sales down 1.9%, where the expectation was a positive 0.1%. So they missed by 19x. That was a huge miss, and that was the first sign that things are starting to slow down. So if Apple comes out and says, yeah, we're not expecting the same kind of demand or the same kind of revenue in 2022, that's going to slash Apple's valuation. And you're going to see a rapid re-evaluation of these largest companies that happen to control over 50% of the broad markets. Like I've talked about many times, your Apple, Microsoft, Google, Facebook, Amazons of the world. And like I said in 2 videos ago, I believe it's titled "This Will Be Worse Than the 2008 Crash" or something along those lines. I even pointed out that YouTube's revenue, or the earnings that other creators make, me, other people, is down about 40%, which usually you do see a drop off literally from December 31st to January 1st of about 10 to 15%. Now it's sitting at 40%. So companies are not advertising nearly as much, so creators are not getting paid nearly as much. So what's that telling you? That companies just don't have the kind of advertising budget that they usually do, and they're usually spending in the month of January. Who knows if that will pick up? Doesn't really matter. I don't make my money from YouTube. Anyways, point is, companies don't have as much money, or they are expecting to not have as much money throughout the rest of this year. Let me bring you guys to a couple other data points. The personal savings rate. This is from 2000 to now. We were at pre-COVID 7.3% in September, 7.4% in October, in November at 7.5%, and then in January of 2020, right before COVID, and February, we were at about 8%. Now we are sitting at 6.9%. So this is, out of a year, the percentage of income that is saved by people. And when people are buying the new iPhone or AirPods or a new Xbox or PlayStation 5, it's coming from the savings rate. That's the money that people are saving out of their income. This does suggest that people are spending more on the cost of living. It does, suggest people have less money available. As you guys can see, this rate shot up to 33% in April, and that's roughly when we got our first stimulus checks, as well as in March of 2021 to 26.6%, roughly when we got the second round of stimulus checks. Hopefully this is starting to make some sense to you. And like we just went over, the iPhone sales are into the ground, or the iPhone search trends are into the ground, as well as that home loans and auto loans are also at a 5-year low. The average for these terms is about 66 for home loan and about 68 for auto loan. You guys can see these are at roughly the high 40s and the low 50s for both of these. So they're substantially down, and like I said, at the lowest levels they've been at in 5 years. All of this does suggest that people are not spending as much money, which makes sense. These companies are used to reporting good numbers because people are getting all of this free money. If you're getting free money, why not buy the new iPhone? Why not get yourself some AirPods? Why not buy the new Xbox, right? I know this is starting to make sense to some of you guys, and hopefully it is very, very exciting. So with that being said, over 40% of the NASDAQ stocks are down over 50%. In a typical year, if the NASDAQ is down 10%, only 12.5% of stocks are down that much on average. So what is this telling you? The markets, like I said, for months now, the markets are propped up on weak stilts. What are these weak stilts? Your large cap stocks. That's why I'm not shorting the stocks that are already down 60%. I will not do that. That is just begging to lose money or not make as much money, in my personal opinion. So if you're looking at something like Apple, I personally think that Apple could very well fall back down to the low hundreds range. So if you put on some puts on Apple, that's going to do exceptionally well. But Apple is a large cap stock, so I will likely put on a couple puts on Apple, but I also want to put on some puts on the broad markets because I think the broad markets are going to fall even more than that. And if you do some rough math here, just some rough calculations, say, hey, without stimulus, take that out of the equation because it's virtually gone now. It's all gone, but people might have some savings left. But you guys get the idea here. If you say, hey, from the peak of before we crashed in March of 2020, if you say, hey, we probably had 15% organic revenue growth per year, so let's say 30%, about 30% higher would be about 380 on the SPY, 385 on the SPY, roughly, give or take. So if the markets have to reprice in this organic revenue growth coming from people earning more at their jobs and spending the organic way minus the stimulus, the markets are going to have to rapidly reprice that back in, because the markets are a forward-looking instrument. And I love to point this out. If you guys are subscribers to this channel, you have heard this many times. But if an asteroid was going to hit Earth in 6 months, and destroy Earth with like a 99% chance of that happening, the markets would fall 85 to 90% the following day after that news broke, because it doesn't matter what's going to happen in the next 2 quarters, in the next 6 months, if the world is going to end. So that's more important. I do think earnings will be good for the Q4, because there was a lot of stimulus the last 3 months, but the guidance that these companies give, long story short, is not going to be as good. So that could drop the markets down to at least $400 on the SPY. But what I would really put my money on is coming back down to about these peaks over here. About $365 is pretty reasonable and what I expect, given all of, the repricing that will have to happen for the broad markets. And I think it's pretty important to even know that we are still $10 away on the SPY from even hitting these lows that we hit in October of 2021. So just a couple months ago, and that is that line right there. So we still have a ways to drop, and we did break under the 200-day moving average. We did not see any bounce around there. So if if futures are red tonight and Monday is red, that's going to solidify this massive sell-off that we are seeing. And even in the crypto markets, we are just seeing things going straight down over the past 7 days, and really over this weekend as well. This sell-off has been pretty damn intense, with Ethereum losing about 27.74% of its value. It'll be interesting to see what happens today with the futures, and if crypto does sell off over the night tonight. Now, with all of that being said, how would I actually put on this $5,000 hedge, and what would I actually look at? So first and foremost, I do think, like I said, the SPY is going to come down quite dramatically, possibly down to $400, if not the lower end range of about $365, because, if you take out the stimulus, what would the real revenue growth be at these companies? And that's what the markets have not priced in yet. Without stimulus, what does the revenue look like? And I think without stimulus, Apple and these large companies are going to see revenue slowing down. So let's say Apple had $100 billion of revenue for 2021. It would not surprise me if Apple only had $75 billion of revenue in 2022, because there is less stimulus being given out every single month or week. And once market participants actually start to realize, hey, earnings are actually going to go down at these companies for next year, that's when you see the rapid repricing, and that's when you will see the sharp drops in the market. So what I will likely do is I like to go out at least one extra week, especially when I'm doing these large hedges. And I would probably go out to the February 4th, because the 28th is this Friday, this upcoming Friday, and then the 4th is the following Friday after that. So I would likely go to about the $400 puts for the SPY, which is about $148 a piece, and I'll probably buy about 10 of those. That'll be about $1,400. Once I get $1,400 of profit, then I will sell out probably, 5 of those contracts, collect my initial investment back, hold the other 5 in free money, because you always want to be safe with your hedges, because even if you bought 10 contracts, sold 5, got your initial investment back, so there's no more risk on the trade. If you just kept 5 and the market does fall to, 365, you're going to make $3,500 per contract on 5 contracts. That's like $18,000, right? So it's always better to be a little bit on the safe side, but also hedge out your portfolio in a way that does make sense. I might also go with some short terms with like a 420 SPY expiring this Friday, but be a lot more careful to actually take profits and get my initial investments back. I will also be looking at some of these cheap Apple puts as well for February 18th. So you get more time on these, but a 125 put, yes, that is a substantial move to the downside, about $39. That's only going for $41. So if you see a big move to the downside in Apple, say down to 140 or 130, these $125 puts, given they have more time, are going to go up dramatically in value. So I will likely do $1,000 to $2,000 in Apple puts, $1,000 to $2,000 in SPY puts, and I will probably throw in some Microsoft puts as well, maybe with some Facebook puts also, because I think Apple is going to be one of the hardest hit stocks once this repricing actually does happen. And I think the Apple chart just shows there is a lot more downside to come for Apple, and this next level is going to be the $157 price. Now, what I hope happens, I hope tomorrow is green in the markets so we can get a better deal on some of these put positions. So that's going to be all for this video. Hit that like button for me. Consider subscribing to the channel. Feel free to check out the link down below in the pinned comment. If you guys want to join the buy and sell alerts, I will be putting out my exact trades that I will be looking at to buy for tomorrow. And then we'll be letting you guys know as soon as I buy these trades tomorrow morning and exactly how many I do buy for what prices. So hit that like button for me, consider subscribing to the channel, all of that good stuff. Let me know if this does not make sense to you down below in the comment section, or if you disagree with this. I would love to hear some feedback on why I could be wrong here. I don't like to think I am 100% correct. I think the data speaks for itself, but if you guys have any input to this, why I am wrong, let me know that down below in the comment section. Make sure to come join us on the live stream later on tonight, 10 p.m. to 11 p.m. Eastern Standard Time. Would love to see you guys over there. So love and appreciate you guys. Thanks for watching. I will see you in the next one.